if you hadn't have been at SMB, you would still have made it profitable?
What I've noticed that the senior traders, they would do this all the time relative to their daily stop loss is the biggest form of edge that I have is something that I like to call as
Welcome back to Undiscovered Traders, where we focus on the charts, stats, and edge of the last six-figure going on seven-figure traders. You do not want to miss this podcast because we have a guy who's previously been with SMB Capital. This is Yanni, living in New York City. His profit and loss has just skyrocketed to just under $250,000, 223K. Am I right?
yes, just under that, I believe.
And that's all just recently in the last 8 months or something like that. So you are the next undiscovered trader. You are the next guy on the path to the million. Touch
Thank
wood.
you. I appreciate it.
Dude, I keep on thinking there's a Christmas tree in the back left there. What is that?
Back left this way?
Yeah, it's not a Christmas tree. It's like a transformer or something. I don't know what it is. It's blurred.
Yes. So it's a little bit of a glass box. I just have a little bit of memorabilia stuff just from trips and stuff like that. Just showcasing stuff. Yeah.
You're gonna have a lot more memorabilia as you travel around the world when you once you make a bit more money. But dude, tell us about SMB Capital. We're just talking about it before. Like, what's your history? What's your past? How do you get into trading? All
Yeah.
the good stuff.
For sure. So I started trading around early 2019, late 2018. I always was really interested in the markets. Just through my dad, I always try to stay invested into the market. I found trading just on social media around 2019, and I was a complete just noob during that time. I didn't know anything about markets. I think during COVID, that's when I really sank my teeth into the SMB style culture. I think I found them on YouTube and Instagram, and I just knew that I really wanted to pursue this. It's something that I always found interesting, and I thought I had the skills to kind of make it there. So I applied to the firm around 2020, 2021. I actually got denied from the firm once or twice before making it in. And it was around the summer of 2021 where I started as an intern. I was in college at the time, just graduating in 2022. I was an intern for about a year or two, I would say. And they really liked the work that I did there as an intern. And I got hired full time in the summer of 2022 at the firm. After that, I traded live until 2024. It was a very competitive environment. I learned a ton from the traders that were there and a lot of lifetime connections that I'm not going to lose. And just the overall culture and strategies that SMB teach is something that I lean into even now.
But so do you think that if you hadn't have been at SMB, you would still have made it profitable? Or do you think they're a huge?
Yes, I think the learning curve at SMB, it sped up my learning curve tremendously. Being at our firm, talking with like-minded traders, um, it was completely invaluable. I think if I was by myself, it would have taken way longer to be profitable. I mean, there's traders on Twitter and YouTube channels like SMB that promote all this free stuff, and I think if you really lean into that, you can be profitable yourself, but the learning curve is just so much greater if you're not at a firm or in a tight-knit community or team like that.
Yeah, no. So if you're in SMB, is that like literally going to the office in New York City? You're having
Yeah.
drinks with these guys, you're hanging out with these guys after work, you're having lunch. Is it like tell me about a normal day there, what you can.
Yeah, so I would get into the office around, probably 8, 8:30. We had a lot of consistent traders that would show up into the office every day. You try to network with them when you can, and, yeah, it was pretty much trading in the office, pretty much 3, 4 times a week typically, sometimes more. I would try to go on the weekends sometimes to do some R&D stuff. Well, we would have happy hours every now and then. It was always great talking with the senior traders there on the desk, and try to make connections whenever you can. I mean, they were also pretty busy at times. There were some
Yeah.
traders that don't show up all the time to the firm. I mean, when you're an 8-figure trader, 7-figure trader, you're not going to be coming to the office. You're going to be, trading on your own elsewhere. But when the market was really hot or things were in play, they would show up into the office, and it was great connecting with some of those guys.
Last question on this, and then we'll go into your profit chart because I haven't seen anyone's profit chart for a while where you capture the moment where they've just boomed and it's all just kind of clicks. I'm looking forward to going to that. But is there like a key lesson that you learned there, or a key takeaway, or one or two things that you'll not forget?
Yes, the biggest thing that I learned from the senior traders there is that asymmetry is so important. There's so many traders that size every opportunity sort of the same. What I've noticed that the senior traders, they would do this all the time relative to their daily stop loss is be extremely small on average days where edge is not really there. And then for the very rare opportunities, they would be exponentially bigger. And it's obviously a skill and there's a ton of nuance involved with each trader strategy. But with every senior trader, that is something that they leaned into tremendously. And it was something that I was missing very early on. I think what changed for me is recognizing in my playbook some of those opportunities and specific playbooks where asymmetry is really important and sizing up those trades. And that doesn't mean like risking half your account on it. It's still within limits, but it's sizing down on the average days and really swinging the bat on the very good days is what changed, and the biggest lesson that I learned at the firm.
Yeah, there's two really big skills there. One, recognizing the opportunity, and two, being able to cut a bigger size loss. If well, even if you've got an 80% edge on one day, and that's the reason that you have sized up compared to a normal day is 60, 55 or whatever. You've
Right.
got an 80% probability, able to recognize when it's gone wrong and not get suckered in. Is there anything on that you've picked up, or on psychology or discipline?
Yeah, I noticed that my trading in psychology is just so much better when you're smaller
Mm.
and waiting for those big opportunities, and it's gonna be very obvious, and I think it also kinda depends on the playbook and your strategy. I trade a lot of, daily mean reversion, and there's some things that you could quantify within that, that objectively make it better. So when we go over trades, I could share a little bit on that, but those are my overall thoughts on that. Just trying to be small and not lose too much on slow markets is such an important skill.
Yeah, no, some of my biggest losses have come in small markets. So let's take a look at your profit curve. I'm looking forward to going through it, and just while you share screen, do you want to let me know is it large caps you're trading by the sounds of it?
So it's a mix of both. I trade a lot of large caps, but definitely when small caps are in play, I lean into that. I definitely prefer large caps a little bit more, but I think opportunity comes in both, so it's really important to just move to where the puck is when that happens.
Nice. Okay, let's take a look at this exploding rocket chart. I don't want to build it up too much. The guy's up. You're up nearly 250K. You're doing well, but it's
Thank you.
yes, and we are up. If you want to go all time, do you want to click all time and take a look at this? I think that's where I saw.
Well,
Yeah, that's the
I
exploding
think for
rocket.
some reason, yeah, back in down here, I don't think I think maybe I have to upload a new broker or something
Yeah,
back here.
yeah.
But yeah, I was gonna focus on just the last 1 year. But yeah, all time, I mean, that asymmetry back where we had very big opportunities in April and a little bit of May was the key difference. And we had a little bit of pockets, in February and a little bit in December and such. But the most important thing that I want to highlight is that my P&L would be kind of just steady and just have pretty big spikes where the opportunity is the biggest. Like I said before, like the senior traders would try to lean into that skill, being asymmetric on the best opportunities. it wasn't uncommon for some people to have like 80 to 90% of their profits come from like only 10 to 20 days out of the year. So I tried to replicate that through my trading as much as I could. And the market in April and May was just super in play for the strategy that I take. I'm sure we all know what happened around that time with the Trump tariffs, but yeah, that's what I have to say about that.
Yeah, no, I, I've spoke to, I see a lot of the top traders in my network, all go big, really. They have a lot of 2,000 days and then they'll have a 60K day out of nowhere and they all do exactly what you're saying. I've spoke to guys who've been in prop firms in the States and Poland, around the world, who also say in the offices in the prop firms, all of the top guys aren't there most of the time. They're only there for the hot markets, and all of a sudden the office will be full one day.
Mhm.
And like, so everything that you're saying is so relatable and it's such brilliant advice that I'm hearing from everywhere. But what I wanted to ask you first is, uh in your previous broker that you didn't upload, was that like flat, or were you making money, or
Yeah, I think it was just extremely small. I mean, during this time I was trading at the firm, so I don't know if I could upload my firm stats. It was
yeah.
sort of like a little bit, yeah, I don't know. They had their like own platform. It's not like we got like statements and such.
But
I
that
think I tried to upload it before, but um
but
yeah, if I'm
that's fine. It's the most
yeah.
important thing I want to know is in October it clicked. Basically, that's what I'm getting at. In October, something happened where you got profitable in a big way. What was it? What happened?
Yeah, so I think actually around here is when I left the firm, around September of 2024. That's when I started trading my own capital. But once I left the firm and was trading my own money, it was the same exact sort of philosophy that I had at the firm, where you had to be small on average days and size up on the big ones. And just throughout that time, we didn't have super big opportunities where I could swing the bat on that. But as time went on towards March and April, that big spike is when we had those opportunities, and I was confident to swing the bat on those because I had this cushion from just trading well previous times. But um, yeah, the biggest takeaway for me is essentially just sitting in your seat and waiting for those big opportunities and actually sizing up and having the nuance to actually know what that is. I actually talk to a lot of junior traders and try to help them out. And when they ask me, uh, playbook questions and such like that, uh, I always tell them that a playbook is sort of everything when it comes to this. Like, the only way that I'm able to size up on these big opportunities is that I'm super specific with what makes them good opportunities. It's not just arbitrary saying like, "Oh, this setup I think is good. Let's size up on it." It's like systematizing that very specifically to know which ones are the best. And I do this like through like a little checklist that I have intuitively, but that comes with like just all the work that I did the last 4 years pretty much.
Can I just ask you, like, when you left S&P, were you kind of thinking like, that's it, me, I'm done with trading, or I'll give it one last chance by myself, or were you like, no, no, I'm definitely, I know I'm gonna make money on my own?
I definitely believed in myself. This was something that I wanted to do with or without the firm. I think the firm not working out was just a little bit unfortunate, and I just think overall would have been better to trade my own money, have my own risk management, and it was a little bit of like the corporate lifestyle that was a little bit, I gotta say, like, I don't want to say too much. That's the wrong word. I just felt a little bit more comfortable trading my own money because it was, I'm not sure how to describe it. It was just a little bit different psychology trading my own money versus the firm money. It was a little bit more real with my own capital versus the firm's. Definitely things like the desk fees and the split was a little bit challenging, especially when you first start out. I wish it wasn't so high, but yeah, I mean, it was extremely tough at the time when I entered. Like we were in a pretty tough market in 2022, and it was just a little bit hard to bounce back after that. And I just thought it would be better to trade my own capital with the skills that I had at the time, with no split, no desk fees. I could trade pretty much whenever I wanted, and sort of that relief helped me to, scale up my own book, I think.
Yeah, I can completely understand what you're saying because like in some respects, I think going to some sort of firm is like trading is so difficult and so few make it that the best chance of success you can give yourself for the majority of people who aren't complete geniuses would be to go in a firm and be with top traders every day because you want to surround yourself with the people you want to be like, and that's just the best way of doing it. But on the flip side, how on earth, with trading being so hard, can you survive the split fees of being at a firm and what they want to take of profits? Then you've got to pay tax on that.
Right,
and it's like, what is left of the money that you make in a game that's so hard to in the beginning? It's like too hard.
right. Yeah, for sure. I couldn't agree more. I mean, yeah.
But then you've done it. But you've had your education, you've surrounded yourself with the best people, you've come out, and then you've got the best of both worlds, I think, in the end.
Yeah, for sure. And I think for some people, like a firm environment would be 100% better. I think, at least for me, I just felt a little bit more comfortable trading my own capital. And I've talked to some people on Twitter or X, whatever you want to call it. Um, it's sort of similar for them. So there's definitely two paths to this, and you don't have to be at a prop firm or not be at a prop firm to kind of make it in this space, I think.
Which method of linen do you best recommend for every new trader?
I think, you know, leaning into the traders that are very transparent, like SMB Capital, they post a ton on YouTube. They have traders like Lance B, who's verified 8-figure trader. Those are the people that you should learn from. The most transparent people that have like nothing to hide. So that's people like Lance B, Kalamagi, traders like that that want to share with you and actually want to see you do well.
Yeah. Not so much the other guys who are big rooms, selling lots lots of courses cheap kind of thing.
Right. Like the ICT traders, stuff like that. Like they're just yeah. I have a lot of beef with the, you know, top step type prop firm like Apex stuff. But anyways, yeah.
Yeah, and that's a whole other thing. Like with Top Step, I don't even know what the model is, but it's some sort of gamified competition of do you want to describe a little bit how it
Yeah.
works or what the issue?
I think the difference with like a prop firm like Top Step or Apex versus like SMB is when you're getting funding as a trader with Apex and all these other prop firms, there are so many rules. The market is already hard enough. At least at SMB Capital, like they do give you a little bit of wiggle room of what you could trade, how you could trade it, your drawdown rules, right? You work with the risk manager to sort of scale up. With a firm like Apex, you have all these rooms that are built in for you to fail the challenge.
Yeah.
I understand that they want to give you funding and they're very picky with that, but there are some rules that are completely against how good trading should be.
Mhm.
For example, consistency rules. We talked in this meeting about asymmetry, sizing up on your best opportunities, right? If you're trying to do an evaluation at a firm like that, like Apex, it's nearly impossible with consistency rules. I think I actually tried a challenge once just to see, and it's just futures, keep in mind, right? I didn't know about this consistency such rules and such, and I got denied payouts even though I, made money with that. because of the consistency rule, and they told me you have to make more money and eventually you'll hit your trailing drawdown. Um, to me, it was absolutely insane, some of those rules. You have to bet bigger on the best opportunities, and firms like that constrict evaluations like that because they're they want you to fail the challenge to an extent. Um, they want you to size the same on every trade, and I just have a very strong belief that's not how you should trade.
I completely understand what you're saying, and it's a shame because it gives some prop firms bad light when there's a lot of good ones out there. Gives some prop
Right.
firms a bad reputation when there's a ton of good ones out there. But
Yeah. And
that's
I'm sure yeah, and I mean, I'm sure some people are consistently profitable at a prop firm like that, but there's just so many more that are not. And it's just sad to see because they're very predatory. I mean, there's firms like SMB Capital that want to share with you. They post on YouTube, right? They share edge with you, and people still gravitate towards those things. And there's so much free information out there, whether that's YouTube, Twitter, whatever. And you should really learn from those guys instead of the people that just want to make a buck off you. I don't know.
it's the same with it's exactly what Kinfo is trying to do now. It's the same with the education space. Like there's some good, real mentors who've made millions of dollars, and it's all proven and verified, and they're on Kinfo's leaderboards, and they've already made the money, but they want to educate their way of doing it. And then there's a lot of other people who are better, arguably many of them better marketers, with no verification at all. And it's like, for me, I've got a ground rule of how can you teach if you can't do it yourself? So if you
Exactly.
can't do it yourself on a daily basis, how can you teach it? It's a big rule for me. But anyway, okay. Sidetrack. Do you want to show some edge? Show a couple of charts. I know that you've been keen. You've got some saved
Yeah.
up, and we'll close out on some of the charts. But so far, it's been a fantastic. I love to speak to the guys who've been in some of the prop firms. It's such a deeper insight than than the guys who just learned by themselves. But both are interesting though.
Yeah, for sure. And also, by the way that I got into Kinfo was actually on Twitter. I always am really active. I post like executions like this. You can still see my screen, right?
Yeah.
So I post a lot of these executions. There was somebody that replied to me that said that, you know, this is fake, like your P&L is fake. I'm like, I'm sharing like all these write-ups and executions. Like, no. So I went and got verified on Kinfo and uh, just at you guys on Twitter, and that's how everything started with this. So, I'm
Beautiful.
glad that it did.
Beautiful. And now you're on here as well. So it's
Yeah.
helped spread the right message. It's fantastic. Okay, so walk us through this. I don't see a daily here, so I'm interested in how you're gonna walk
Yeah.
us through this.
Yeah. So essentially the biggest form of edge that I have is something that I like to call as exhaustion gaps. It's something that Lance B talks a lot about actually in his blogs. But essentially the way that I quantified this is you need to see 4 ATRs in the last 5 days, some sort of hot theme or catalyst that's in play. And this could be like cryptos, semis, things that are like very retail heavy that, you know, grab the attention of a lot of retail traders and something that a lot of people might want to chase. So everyone wants to find the next NVIDIA or SMCI, et cetera, whether that's with the quantums, crypto, whatever. Those hot
Mhm.
themes are extremely important for this sort of playbook. So essentially, I want to see an ATR extension on the daily chart. So the way that I quantify this is ATRs in the last 5 days. And the way that I do this is just with my indicator right here. And the reason why I constrict it to 4 ATRs in the last 5 days is one, you could see historically like where it has traded on the daily chart and compare like the pullbacks when it gets to the top end of this range. But speed and time is so important for this setup. You want to see an extension in a fast amount of time. And if you have the time element attached to the ATR, it makes it extremely beneficial. So that's the way that I try to think of it. And if you don't get that extension in ATR and you're just quantifying like, oh, it's up whatever X amount of ATR in weeks versus that speed up in ATR, I think that's the difference for this strategy, just from a technical standpoint. Obviously, you want to see like a high percentage move in a month or 2 months time, maybe even shorter, depending on the stock. And you also want to see that capitulatory volume on the daily and increased volume on the daily. Once we have that sort of setup, the whole point of exhaustion gaps is, the stock actually gapping up and giving you sort of this backside trade.
Yeah.
And once you have that daily chart alignment, you just have to think of an intraday entry somewhere where you might get involved. And for me, that's either like an opening range break or just trying to short fast moves or long fast moves, depending if it's on the long or short side. But a fast move like this, for example, opening range breaks or long, lengthy consolidations after hours of sideways are the best areas to enter this. And I typically try to stick with these for sort of a trend day. So I have a few examples here. Yeah, so we covered like the top things here for ATRs, et cetera, et cetera. So here are some of the top trades that I've taken. And actually I'm pretty sure you could see on Kinfo like my executions too, right? Or the P&L.
Yeah, we could say them, yeah.
Paper.
We could say
Yeah,
executions as well.
yeah. So if you want to go back to that, I have no problem showing this, but essentially, like I said, you try to short the pops there, opening range breaks. I would probably verse high a day on that.
Mm.
So that was a good one on QUBT, which is a quantum name. IPOs are very good for this. This is a day 3 IPO trade where Circle absolutely went ballistic. Like this stock uh, had a very low pricing, ran up the next 2, 3 days. And even though I don't have like the ATR in days for this, you typically try to get like the average range that it's trading in. And when it's up 2, 3 days in a row, closing at the highs or near the highs and then gapping up, that sort of backside trade is really powerful. So recently on Circle, that was a good one. If I go back to my executions, is typically the same thing. Like I'm trying to find backside patterns on their VWAP, opening range breaks, lengthy consolidations, and I'm just trying to play the intraday ranges for that. So that's on Circle. GME recently, that was on 528. So if you notice, like all of these are just super hot retail themes, IPOs, GME. This was like crypto related. They did the crypto treasury. Um, yeah, just those exhaustion gap type patterns is what I try to capture.
It's just the same thing over and over and over again. Played the same way.
Yeah.
I
So
thought,
the big, yeah, go
I,
ahead. Sorry.
I was just gonna say, I would probably guess that you get these, depends on how hot the market is. You're probably gonna get 2 to 5 of these a month or something like that. Maybe slow
Yeah.
months you get 2, good months you get 4, 5, and that's it. 5 trades a month, 5 good trades a month. In a good market, maybe in a slow market you may get 1 or 2.
Yeah, I would say that usually 2 to 5 is pretty normal. I mean, there's a lot that may look like it might be an exhaustion gap and it's not very good.
Yeah.
And those are the ones that you have to avoid. But like I said, being specific on your playbook, the nuances that we discussed earlier, those are the most important for me. And if you compare that criteria to the sort of worst ones, you're going to see that it probably doesn't reach all this criteria versus the ones that do work. More often than not, they're going to have those nuances for sure.
It's incredible you've just give that all of that criteria away. It's very nice of you to give that criteria away as well because I know this pattern because it's something that I've traded in the past, not to
Yeah.
those specific criteria, but it's those volatile retail stocks that put a big gap in, shorting them against the previous day support or VWAP break. It's took a couple of years to figure that out. So for you to give it free right now on this podcast, uh,
Yeah.
it's a great help for a lot of people if they take notice.
Yeah. I don't mind sharing it. I think it's definitely easier said than done. I wish
Mm.
there was people telling me, trade this setup, learn this stuff. It took me years to kind of figure that out too. It's not something that comes easy. And even if you do have this criteria, you still have to know how to spot them, where you're going to trade it, how to size up on it. All those are super important. And even just giving out that criteria, that's just the first step in trading. So more than happy to do that.
And also trading it in real time is somehow it's a skill developed over years and years and years to make the chart at the end of the day look the way you want it to. Like your charts, the way you've traded them, it takes a couple of years just to have the executions perfectly lined up. And
Right.
like, because a lot of people can look at charts, and, I would have done this, I would have done that, I would have done this. But
Right.
to make the chart perfect, trade it perfect, it's not easy.
Yeah, for sure.
I think is that it, or do you have anything else to show, or is that was pretty much it?
Yeah, I mean, I would say, just the last thing with all these examples, right, and just the P&L curve that we talked about before, the biggest trade and the most breakout trade that I had recently was this exact specific pattern on the overall market, which we get not very often. If you study the nuances for so this day here, we actually did have that same exact pattern just on the overall market. It's the same sort of nuances, right? 4 ATRs in the last 5 days. And if you study this indicator um, in the overall market, you're going to see that it's actually not such a bad signal. And you could get this on TradingView for free, by the way, if you want it. It should be there. But yeah, we had the biggest extension that we had in pretty much even before COVID didn't even have that big of a down move, I think. Let me double
Ah,
check.
you trade it long as well as short, which is interesting. You play it both
Yeah,
ways. Ah,
yeah,
nice.
for sure. We had one on UNH as well. That was a setup that we had. I would consider this sort of an exhaustion gap that we had uh recently here. This is like a little bit of a day two play. Sometimes you get these day two plays where the day one backside is not as clean, but the next few days are cleaner. But just that speed up and ATR extension on the daily, followed with like the nuances and the intraday pattern. It happens on large caps, small caps, crypto, anything, because I think it has to do with human emotion, like it's an actual inefficiency where a stock could be stretched out like a rubber band, essentially, and it has to snap back eventually. And you could just wait for that intraday alignment. And there's good intraday trades that you could take from that. So it happens everywhere: long, short, small caps, large caps. On the overall market, when you have that big of a catalyst with the Trump tariffs in play and that speed up on the daily, like we have that consistent downtrend, and then we start to puke out multiple days in a row without a pullback. That sets you up for such a good trade. And then also we did have intraday news here. Um, I guess that was like the tariff pause that we had that was sort of leaked. It turned out not to be true, but that's what this move here was. But honestly, this move here was just enough for such a big intraday trade where I wanted to size up on. Um, so yeah, I mean, I did get a little bit lucky on that breaking news there, but uh, even not counting that, like this move in itself was one of the biggest trades that I've taken because of all the nuances we kind of discussed.
Yeah, it's beautiful. Do you want to stop sharing now? We'll just close it off.
Sure.
Yeah, I just want to quickly talk to you a little bit about. So did you took obviously some of the Trump trades. I made I paid for about I'm getting married next week, and I paid for about 35% of my wedding thanks to the Trump's tariffs. So I just thought I felt a little bit sick how expensive my wedding was, and I think I'm gonna throw some money because like. But if you talk us through your mindset with the tariffs, because for mine it was like the market completely panicked. The entire market completely panicked over the Trump tariffs.
Right.
The tech sector led with the decline because of the most volatile stocks um like your Nvidia and your Tesla and your like the Magnificent Seven. And I just thought this is my philosophy. Don't make anywhere near the money you made. But my thought was, this is not a reaction. As soon as the deals are in place, it's going to come back. And Trump always threatens something bigger as a tactic to negotiate a better deal. And he wrote it in his book. So surely,
Yeah.
surely this is all going to get resolved. And this is a huge overreaction. So I threw all of the money I had for my wedding, all of the money I had to pay for my wedding, I threw into the into the into the a selection of the top Magnificent Seven stocks, and it paid for 30-40% of my wedding. But what was your? And then I've still got some in, but I sold most on the bounce. But what was your thoughts on that?
I mean, same exact thoughts. Exactly what you described. Like Trump always tries to get some negotiating power by being super extreme and then coming to the middle. If you study the 2018 market, it was very similar as well. And tariffs are something that is very elastic in the sense that tomorrow it could be 20%, 100%, it could be zero. These are all just negotiations and it's short term panic. Whenever you see panic in the market, I want to be fading that, whether that's in large caps, small caps, any extremes, those are good trades. And when you get that in the overall market, it's particularly special because the intraday is going to just be so much tighter. And the probabilities are also better as well because you have so many market participants involved in that sort of idea.
Yeah, and it's the same with wars a lot of the time as well. Wars create panic, that create volatility, but then if you look at any of the wars going on now, the market's only at all-time highs, and there's about 5 wars going on all or at the same time. So like, it's interesting.
Yeah.
But do you have any final advice, any golden nuggets, any pieces of final thoughts before we close out?
Yeah. Some things that I actually do want to talk about a little bit, just like advice for newer traders, some things that I would want to hear if you're like sort of developing and wanting to trade on your own. I think some of the biggest things in your development is working with like-minded people, building out a team and a pod. That's what we call it at SMB. Just making a group chat of like-minded traders and sharing executions, prepping ideas, and talking through some things is one of the most important skills in my development. Like if it wasn't for my pod and pushing ourselves every day and being on voice chat and just talking through ideas, you won't have such big ideas like that. So I think that's really important as well. Something that we didn't talk about before. But yeah, edge is extremely important. It's typically not your psychology and it's mostly your playbook. You'll have better psychology with a good playbook, being very specific with the nuances in that playbook. And then working on that with the team is just super valuable. That's the best advice that I could give to any trader trying to develop.
Yeah, I think it's as well. What I didn't realize is that a lot of the best traders that I know all know each other. It's like a club. All of the
Yeah.
top traders, because go to different events and I do different interviews with different people as well. So I interview a lot of these guys. One thing I realized is they're all in group chats together. They're all in group chats. They're all in different chats. They all know each other from different places. And I'm like, it's like, holy shit, all you guys, even with different rooms who teach each other, they all know each other. And many of them sit on the phone all day talking ideas through with people. Exactly what you just said. So this is like, if there ever was a secret to success, it's this. It's that you need to be in a group of other talented traders who want it as much as you.
Exactly. Yeah.
Yeah. All right. Thank you so much for your time. It's been invaluable, fantastic interview. Really looking forward for people to seeing this.
Yeah. Thank you. I really appreciate it. Thank you for the time and hope you take care.